Good afternoon, everyone. I'm John Garcia from PSE's Market Education Department, welcoming you back to another PSE Stock Market webinar. For our registered voters, have you decided who you're going to vote for already? Well, we sure hope that you've done your part in doing sufficient research, as this year's election, just like the elections in the past, will definitely be a crucial event in Philippine history and will shape our country in the next 6 years. Indeed, elected officials will have the primary responsibility to set the country on the path to recovery and stability. Thus, their decision and actions will greatly impact the lives of every Filipino, and incidentally and interestingly at that, the stock market's performance as well. Economics and corporate fundamentals, these are very crucial to investing, but also we must consider politics as well, as they play an important role. Historically, there are patterns. The stock market has been inclined to follow certain trends that repeat themselves whenever a new president is elected. So why is that so? How does presidential elections affect the market? And more importantly, how does that affect you? Okay, so yan ang mga sasagutin natin this afternoon. And to answer these questions, we invited a resource speaker from CTS Global Equity Group, Inc. to discuss the different stock market cycles, the election years and its corresponding market movements, the historical relationships between election years and the stock market, what investors should expect for 2022, and maybe we will be able to cover some investment strategies during the election years. All right, so I hope everyone's ready for today's webinar. Before we get started, here are a few reminders. So please note that this presentation is for educational and informational purposes only. This should not be construed as a professional, financial, or investment advice or recommendation from the PSE. And also, as our topic is a little bit different this time, let's stick to the fundamentals. Let's stick to the data. Nothing political here. We just want to discuss how markets perform in relation to election years. And as I have mentioned earlier, we have invited a guest from CTS Global Equity Group, Inc. to be our guest resource speaker today. Allow us to introduce him first before we go to his presentation. Our guest this afternoon is currently the VP and Head of Macroeconomics at CTS Global Equity Group, Inc., one of the PSE accredited stock brokerage firms. And by the way, this company just recently concluded its initial public offering with a 1.375 billion capital raised. So si Jason graduated from the Ateneo de Manila University with a degree in business management, minor in financial management, and has earned the Chartered Financial Analyst designation from the CFA Institute in New York in 2015. He has been trading for the past 10 years and specializes in global macro opportunities. He is also a lecturer and contributor at Calum Trading Institute, which is a sister company of CTS Global Equity Group, Inc. Ladies and gentlemen, please help me welcome Mr. Jason Mariposa. Hi, Mark. Jason pala. Hi, Jason. Kumusta?
Hi, kumusta kayo? Okay lang. I'm excited to present to you guys,
We're very glad to have you with us this afternoon. And congratulations dun sa recent IPO niyo sa CTS. Very interesting lang yung sa Calum Trading Institute. Can you tell us more about it? Is this open to everyone na gustong mag-aral ng trading?
Yes. Actually, Calum, yung lahat ng professors of Calum is actually employees of CTS Global Equity.
I see.
So all your teachers, professors, are going to be practitioners of the market. No? So we started this sometime around 2014, 15. Okay, when we thought that we were ready to share to everyone yung style namin sa market, which is what we call FTSR, which is a combination of fundamentals, technicals, market sentiments, and risk management. So we're sharing this holistic approach to the markets, and yeah, it's open to everyone. And I think we're planning to resume our live classes. Syempre, we got postponed during the pandemic.
Wow, very, very interesting. And I guess also on that point, Jason, baka sometime in the future ma-invite ka rin namin to be one of our lecturers naman sa aming Certified Security Specialist course. But anyway, we will leave that for another discussion. Today, we have a webinar about stock market performance in presidential election years. The floor is yours. Take it away.
Okay, thank you. Okay, so actually I was thinking about starting this with a story, alam mo yan, just to break the ice. But since I think we only have 30 to 45 minutes for this presentation, di ba? So para we can maximize our Q&A, di ba? What I did here was that, ginawa ko is that the performance of the market is my parang springboard, for a deeper discussion about, markets in general and the cycles that are in play today. Okay, so let's begin. Okay, cut to the chase tayo dito. Okay, I think what you will notice here in the first year of election is that usually up yung market. So what I did here was that 3 months before elections or 3 months after, 6 months, tapos 1 year before and 1 year after. So I think safe to say that during election time, there's usually a lot of action in the market and most of the action is green. And to me, what stands out here is that if you look at yung year 1 year after election, the first year of the presidential cycle is mostly the market's up 100% of the time, and the average gain is 23%. So I think, just by judging by this data, maybe it's something to be bullish about, since the market's quite weak in the past few weeks. So I think if history rhymes, the next ads means first year could see a positive return. And especially today, I think stock valuations are quite low. Okay, but if we extend beyond 1 year, I think the picture is a little bit more complicated as expected. So I think this is, to be honest, close to random. So I think we can label this the effect of new elections presidents as the first year effect. First year effect. Okay. Okay, so I guess my opinion on this first year effect is I think that I may be wrong, but I think a lot of it is actually coincidental. I think the first year effect may be just really a function of where the market was at the cycle during that time. Because I'm gonna make this a lot clearer later, just by explaining what happened over the past 30 years, and different cycles at play. But if you look at the past few presidents, they actually started during a long bear market or a big decline in the market. So like Ramos here in 1992, so it was actually a long bear market, sideways for a few years. ERAP 1998, we just had a huge decline during the Asian financial crisis, and the market had a big bounce in the first year. Si Gloria naman, somewhere around here, after the Asian financial crisis, we had a long bottoming out. Market was actually extremely cheap during this time. Okay. And see, Benigno Aquino, during his time, 2010, it was actually the time of a big bull market actually around the globe. And see, our President Duterte, 2015 was actually also 2016 nagsimula actually down din yung market during that time. So I think this is a big ingredient to the first year effect of where we started. And I guess, syempre when a new president comes, there's a lot of promises about plans of what's going to happen next. And I'm sure that contributes to the, optimism in the first year. Okay. Okay, so let's summarize the first year effect. Okay, maybe because of where the market cycle, where was the market was at the cycle during that time, and of course some optimism about the future plans of the new president. Okay, and I guess like on the local part, no, what are investors looking for? Okay, so I guess this is from Diwa Guinigundo, our former BSP deputy governor. Okay, so it's a long quote, but I guess it's just good governance, integrity, continuity of good public policy. So I think this is very important, diba? Kasi like especially for a young country like us, diba? Minsan like the policy of the past 6 years, diba? Next 6 years, iba na. Okay? So it's like the progress is quite slow, syempre, if every admin is focusing on different set of policy priorities, diba? And of course, more importantly, good market-friendly political and economic environment. Okay? So aside from this, I think especially for developing markets like us, diba? So foreign investors are looking at the fiscal health of the country, diba? Like fiscal deficit to GDP, debt levels to GDP. Okay, so parang they want a complete plan of ensuring that parang you're spending responsibly. Okay, and actually in truth, diba, there's nothing wrong with using debt, diba? As long as you spend it on productive investments, diba? So I guess as an analogy, diba, like if you borrow money to go on a vacation, okay, diba, that will deteriorate your personal balance sheet, diba? But like if you borrow money, let's say to make help build your business, diba, which has a long track record of profitability, very good cash flow, for example, diba? And that to me, that's a responsible use of debt, diba? So for the debt situation to be sustainable, the government has to be investing in productive assets that generate cash flows. Okay, and for some specifics, okay, I think if you will notice, the Philippines, if you just check out the top 5 companies today, 10 years ago, 20 years ago, you would find the same names on the top 5, diba? Henry, diba? The Ayala family, diba? They're always up there, diba? So, kumbaga, parang I guess our landscape needs more competition, diba? Needs more liberalization, diba? To give other players a chance and to even the playing field, diba? So I think that's very important for the vitality of our economy. Okay, and I guess number 2, okay, what are the policies that are going to be tackled by the government? Diba? At least it is said like more on populist policies, diba? Like giving subsidies, vouchers, or investment and productivity, diba? Especially in infrastructure. Diba? So number 3, I think this is very important today. As we all know, we are major importer of all kinds of commodities, diba? And I'm sure you guys have noticed that our full tank has increased a lot, diba? So it's so expensive nowadays, diba? So how are we going to tackle this? Are we going to invest in more production at home, diba? To reduce our reliance on importing these very expensive commodities today? So I think this is very important, diba? So number 4, and poverty, inequality, diba? Number 5, the political system of dynasties, diba? And yeah, I think you get my point, diba? So these are very big developmental, policy initiatives by the government that will have a long-lasting impact. Okay. Okay. And I guess just to understand more about what happens beyond year 1, 2, 3, 4, 5, 6. So politics is very important, of course, but I would argue that it's just one piece of the puzzle. Actually, there are gigantic forces out there that can influence stocks, beyond the political environment. Okay, so this is my specialty, since I've been trading global markets for the past 10 years, global macro. Okay, so okay, these 7, we're gonna touch on this in the presentation, just to give you guys an idea. Okay, so one is the environment risk off, risk on. Diba? Meaning, ano yung sentiment ng market towards stocks globally? Are stocks generally rising or falling? Diba? What's the policy of the Fed, the US central bank? Diba? Hawkish or dovish? Diba? Where we are in the overall cycle? Diba? Strong or weak peso? Diba? Cheap or expensive? Diba? And I think number 6, 7 is very, this is very poignant today. Diba? Very important. Diba? In geopolitics, diba? And other special situations like the continuing COVID lockdowns in China and how it's affecting global supply chains, and of course the war in Russia and how it's affecting commodities. Okay, so I guess answering the first question, risk off or risk on. I think it's pretty simple. I mean, like if you look what's happening today. So year to date, this is the performance of the market. Diba? So yeah, we've had a big rally for in the past 3 years since the COVID low. Diba? A lot of markets have been up. Diba? Like for example, the leader has been Nasdaq technology stocks, which is up 60% from 3 years. And actually it's up like 100% from the March 2020 lows. Diba? Okay, so Philippines, we're here. Unfortunately, we haven't, joined yet the rally. But I put it here. So this is the Nasdaq over the past 3 years, and this is the Philippines. So unfortunately, we've had this, up down action the past few years. Okay, so yeah, in general, I think we're encountering a risk of market sentiment, and pretty sure this has a huge impact also in Philippines, diba? Just look at the foreign flows for this year, diba? In fact, the past few years. Okay, and like if you look at the bond market globally, I just put here the biggest bond market in the world, which is the US. Okay, so it's down 15% year to date. So this is your 10-year bond in the US. And this is your 20-year bond, which is down, I think, a record 30%. So what's causing this is really, if you've been following the inflation numbers globally, well, they've been exploding higher and making records. And that's not good for bonds. And it's forcing the Fed to tighten policy. And of course, that also impacts the stock market. Okay, so if you look at the currencies abroad, so what we're seeing is really a flight to safety. So meaning if there's a lot of turbulence in global markets, usually money goes to the US dollar. So this is also because US investors are the biggest investors in the world. And if there's a lot of turbulence, they usually go to the US dollar. And it's also a function of the tightening liquidity in global markets. So if you look at these are the G10 currencies. Year to date, they are all down significantly versus the US dollar. Okay, and this is our Asian currencies are also, mostly down against the US dollar. Okay, so later I'm going to explain how significant this is, especially for us. Okay, and if you look at the only market that's up this year, in the past year, actually, it's a commodities market. And I mean, if you just look at the performance of these commodities, it's no wonder that inflation is, exploding around the globe. And that's what's causing the Fed to tighten, which is causing the risk-off environment globally. Okay, so there's a very important saying, that no matter where you are in the world, actually you should pay attention to what the Fed is doing. The Fed is the largest central bank in the world. I mean, the US dollar is the most widely used currency in the world. So if US dollar liquidity is tightening, it actually impacts everyone. It impacts the whole world. Okay? So I think if you look at the action a while ago, diba? Bonds and stocks are down and commodities are up, which is actually typical of, we're at the peak of the economic cycle, at least for US and other developed markets. Diba? Okay, is that we're somewhere near here in the peak of the economic cycle, diba? Where there's a lot of overheating on inflation, and the Fed is quite aggressive in tightening policy. Okay, and if you look at the optimism on growth, we're actually near the March 2020 lows already. Okay, and if you look at GDP, US GDP in the first quarter, actually yung expectations is a 1% growth year on year, but it contracted by 1.4%. Okay, so this is like, I'm sure you've heard this word, right? That recently, that there's a lot of stagflationary pressures, meaning inflation is going up, but the growth is going down. Okay, and this is what I mean, that when the Fed is doing something, everyone is affected. Okay, so look at this. Okay, these are the past, just the BSP communications this year. Okay, in January, what the Fed said, okay, rate hike is unlikely in the first half of 2022. Sabi niya, okay, even if the Fed is going to raise rates, we're not going to follow. So that's what the BSP said in March. BSP unlikely to move in lockstep with the Fed. Okay, but the latest one, April 27, okay, ano nangyari? BSP may consider rate hikes in June already. Okay, and to me, this doesn't make any sense. Actually, Philippines has no inflation. Yes, it's going up, but it's still quite low. The latest number is around 4.9%. Yes, it's going up, but it's within the BSP target. And if we look at our GDP growth, we're still on the recovery pace. We're still on the recovery, nowhere near what happened in the US. Okay, and to me, what's happening here is really, if you look at the peso, if you look at capital flows, it's getting very violent because of what's happening globally, because of what the Fed is doing. Lahat ng flow is going to the US dollar. And what the BSP is doing is really, preventing destabilization of the peso, which of course will impact our economy. And that's why they have to raise rates prematurely. Right? And definitely, this is going to have an impact on growth of the Philippines. We're just recovering from this pandemic, and now you're raising rates right away. Okay, so I guess just to give you guys some perspective on how big this inflation problem is, and why markets are getting so volatile. Like if you look at the market yesterday in the US, I think it's down 4 or 5% across the board. And like if you look at the S&P 500, which is the 500 biggest stocks in the US, yesterday 95% of the stocks were down. Okay, so this is the US market here. The white one is the Fed policy, Fed funds rate. But it's like the BSP policy rate, and the red line here is the inflation rate, the US. So as you can see, it's the job of the Fed to raise rates accordingly, depending on where inflation goes. As you can see here, so this is quite a long chart, 50-year chart. Okay, but if you look at what happened today, this is your Fed policy rate at 1%. This is the inflation rate at 8.5%. Okay, so this is what we mean by, when you read on the news that the Fed is behind the curve. This is the curve that those guys are talking about. Okay, so now, I think the Fed is now praying that sana bumaba na itong inflation, diba? But I think they've said that the inflation is temporary last year. Diba? First half of the 2021, no, it's just temporary. Diba? Second half of the 2021, inflation is still going up. Diba? It's still temporary. Diba? Then suddenly they said, okay, we have to fight inflation. Diba? And they had this hawkish pivot. Diba? Now they're planning a very aggressive rate hike cycle. Okay, I think the target for the end of 2022 is for this to go up somewhere near 3%. Okay, so I guess just by showing this, there's a huge gap between the two lines, which means that there's going to be an aggressive rate hike cycle coming up. Okay, so now, I mean, what people are talking about is that, okay, because of this, rate hike cycle, which is very aggressive, we might have a hard landing for the economy. Hard landing means recession. Yung soft landing means that, okay, it's very mild, it's just a slowdown, and there's no contraction of the economy. Okay, and I hope you guys see this chart, no? So what this chart shows that, versus other cyclical peaks in the market, US market, no? So dati, the Fed had a lot of leeway to cut rates. Okay, like for example here, diba? In 2015, when people were scared of the China slowing down, diba? The Fed had 225 basis points of interest rates to cut, diba? Okay, like it's not here, but in 2008, interest rates actually went up from 1 to 5%. And when the crisis came, the Fed was able to cut from 5% to 0%. Diba? So 500 basis points. Okay, so today, interest rates are only at 1%. So in the US, diba? So with 1%, there's actually a little room to ease policy, diba? In case a recession comes. Diba? And I think, as we mentioned, that today is a stagflationary environment. It's a little tricky. Because you're either going to choose. Do I attempt to kill inflation, or do I attempt to support growth? So it's like there's a conflict here. Conflicting priorities in the short term. And it's a little complicated. Like you have the war, you have the ongoing pandemic, all those things. So I think this explains a lot, no, of why we're having this huge risk-off environment globally, which is, this is going to be the backdrop of the next president. It's complicated, right? Okay. So what I'm seeing here is that, for example, if the Fed tightens, then there could be a bigger pullback in the US market. So if you look at historically, so this was in 2008. So every time there's a big rate hike cycle, stocks usually have a hard time going up. So for example, in the closest one is 2018-19, this was a rate hike cycle. It's quite small, but the US market actually fell 20% that time. Okay, so in 2005, there was also a gigantic rate hike cycle. That burst the mortgage bubble in the US, and what happened was a huge bear market. So you get my point. That if you have inflation, rate hikes, that typically makes the stock market underperform. And if ever there's a bubble in the market, it pops. Okay, and if you look at history, there's a lot of contagion, meaning if something happens to the US market, it affects the entire emerging markets, which affects the Philippines. Okay, so I have a lot of arrows here, but let's first, I guess, let's go back here. 2003, 4, 5, 6, 7. So this is emerging markets, the blue line. So that time, actually, there was a gigantic emerging market bull market. At that time, we were coming from the Asian financial crisis. China was opening up to the world. Their GDP was growing at 10% per year. And that was benefiting, of course, the entire emerging markets. So at this time, giant bull market, emerging markets were up actually at around 500%. Philippines up around 300%. Okay. Then we had the 2008 crisis. So as you can see here, this is what I'm saying, where contagion, like even though the US subprime mortgage crisis had no connection whatsoever to the Philippines, because investors were losing so much money in the US, they decided to, sell everything around the world. And that's why there's what you call the contagion risks. And like, if you look again, the past 10 years, I mean, it's the same, really the same, European sovereign debt crisis here, so we're all involved, China hard landing fears. Okay, so this is what happened to markets. US-China trade wars, of course, that affected emerging markets a lot, which also affected China. Okay, so like as you can see, this was 2019 was the war on oligarchs. Like Duterte, like labeled a lot of our top companies, a war on oligarchs and things like that. But I mean, if you look at the market, yes, it definitely affected certain stocks, like for example, Ayala Corporation, Metro Pacific. Okay, but if you look at the entire market, I mean, like the whole region was actually going down at that time. So it was because of the US-China trade wars. And during this time, the Fed was also tightening policy aggressively. So I guess I think this is chart is showing you what I mean. That's, I'm not discounting politics. Of course, it's important. But you have also take into account the big gigantic forces and cycles out there that has definitely has a big impact on market sentiment in the Philippines. Okay. So a while ago I talked about the US dollar. So I think US dollar is actually very important for emerging markets. If there's a lot of dollars in the system, it means, okay, maraming liquidity, it means a lot of money will be flowing to us. Okay, so this is the Asian dollar index. So if this is going up, it means that Asian currencies are strong against the US dollar. If it's going down like today, it means that the US dollar is strong against Asian currencies. So you will see here about how powerful the US dollar is. Okay, so like here, weak US dollar, strong Asian currencies. You had a massive bull market here. Okay, so the Philippines here is the red line. It went up 800% from the 2001-2002 lows, and emerging markets went up 1,400%. Okay, and during the past 10 years, okay, strong US dollar environment. So take a look at what happened to the emerging markets in the Philippines, which are, unfortunately, we've been sideways for many years now. Okay, and as for other stuff affecting global markets, I'm sure you guys are in the loop with this, right? That the war in Russia-Ukraine is not over. I think it's going to take a long time. And if you look at the sanctions, sanctions against Russia, they're still escalating. Okay, so that means that the disruption on the global commodities markets is going to take some time. Diba? Like for example, Europe. Okay, if Europe stops buying from Russia, ano mangyayari? Diba? Can they just ship to the US overnight? Well, that's not so easy. Diba? US is a continent away from Europe. Diba? You'd have to send oil or natural gas over the sea. That's not, that's not so simple. Diba? Okay, and like if you look at the food also, the agricultural supply chain, there's a huge disruption. So we have a shortage everywhere. Diba? Ukraine is like the breadbasket of the world. Diba? A lot of wheat, a lot of corn. Russia also produces a lot. Diba? And there's already a shortage. Like if you look at the news, for example, in Indonesia, because of a local shortage in vegetable oils, they stopped exporting, which is a big issue because if you look at the global production, they produce 30% of the global production of oils, vegetable oils. And I think here, so the food shortage, hopefully not a crisis, is there. And if you look what's happening to China, it's also locking down. So we have a global freight crisis. Wala nang large flies. Okay, we also have an energy shortage, like especially in Europe. If you look at electricity prices in Europe, look at that. It's going to the moon. It's like up 400% in the past year. Okay, and I think yung Philippines, we don't have a problem yet, but in the next few years, the Malampaya gas field, which is 20% of our country's energy needs, is going to be depleted. And unfortunately, there's no replacement yet. Okay, so I think that's what's happening. Inflation around the globe, I think it's going to be stubborn. A lot of commodities are very expensive. And definitely, I think this is going to be a huge challenge. Like for example, I mean, personally, the full tank of my car just doubled. Diesel kasi, it just hit 5,000 pesos. It's very expensive. Thank God for work from home. But unfortunately for our fellow Filipinos, it's not that simple, right? Okay, and I think that medyo overtime tayo, sorry, but okay. So I think also if we look at the energy markets, I think there's a lack of investment over the past 10 years. So this is like similar to the Philippines, diba? Like, okay, the Malampaya gas field is depleting, but okay, we're not doing anything yet, diba? And so if you look at that situation, we're going to have a supply-demand imbalance. Diba? Yes, of course, there's renewables, but renewables are only 10% of the global energy mix. Okay, so as of now, there's no way that it can meet the demand, which is still growing. Okay, okay, next up. Okay, so geopolitics again. I think if you look at the headlines, the geopolitics between US and China is getting a lot more severe. And it can have, tremendous repercussions. Okay, China's around, I think, almost 3 trillion of forex reserves. 3 trillion of forex reserves. But what happens if, US suddenly decides, okay, to sanction China because of this, because of that. So suddenly, nawala ng 3 trillion in China. How will it impact the economy? It's like a nuclear bomb. Okay, it's gonna affect everyone. Okay, and so as I mentioned, I don't want to be bearish, but okay, it's just that it's a complicated picture out there. Of course, we have to be objective with what we're seeing. Okay, and like if you look at the COVID in China, unfortunately, it's not over yet. So if you look at the lockdown index, this is lockdown index, it's China is getting near to the initial lockdowns that they did in January 2020. So if you recall what China is doing, they have a COVID zero policy, but it worked before, but it's not working now because of Omicron, which is, as we all know, highly contagious. Okay, but unfortunately for China, they still have quite a low vaccination rate versus other countries, and they also don't have herd immunity yet. And you can do the math, right? They have 1.4 billion people. If like 2% of that needs a hospitalization, that's what, 280 million people. How are you going to put that in hospital? So that's why I think that what's happening in China is that they have no choice but to do this lockdown. Okay, so I guess that is the end of my presentation. Okay, sana hindi kayo na-depressed, no? But actually, you can look at it from a half glass full, half glass empty perspective. To me, as a trader, as an investor even, that's actually when market goes down, diba? Dapat dun tayo excited, diba? I mean, if the market goes up all the time, how can we buy low, sell high, diba? So for me, I know this is a very cliche concept already, but when there's danger in the markets, to me, there's a lot of opportunity. And I think that with the global environment today and the elections, and the uncertainty that may come from the elections, I think there's a lot of tremendous amounts of opportunity. So we don't have much time, kaya hindi ko sinama, but I mean, if you look at the valuations of some of our blue chips, actually 10-year lows na yan eh. Like for example, if you look at our URC, URC is nearing the pandemic lows already. Okay, so for me, yeah, this looks very scary. Okay, but it really spells a lot of opportunity. Okay, so thank you.
Thank you, Jason, for that very holistic presentation. Si Jason gave us all sides of the picture, not only the local market, but he also gave us an overview of what's happening around the world. So as you can see, guys, the landscape is much complicated, compared to what we're seeing here sa Pilipinas. It's not actually just the local elections, right, Jason?
Yeah, that's why actually I decided to make the election data just the intro part. Because for me, based on what's happening today, it doesn't do justice if we focus on this statistics. We have to. Right. That's why I spent a lot more time on the big picture.
And it's good that you highlighted that, Jason. Kasi we are probably facing something that's not experienced in the past election years. Actually, Jason, I am going to ask for some key takeaways. If ever may gusto ka pang dagdagan.
I think most people are scared of uncertainty. Mm-hmm. They want to know what's going to happen next. Ano performance ito? Ano prediction mo? But actually, when you want to enter the stock market, you have to embrace uncertainty. Actually, that's what makes you the money in the end. Pag uncertainty, stocks become cheap, then that's your buying opportunity. So I guess my tip is really, embrace uncertainty. And when you participate in the market, I think it's key that, you have cash flow. But don't depend on the stock market for your, daily living needs, monthly expenses. Kasi, otherwise what's going to happen to you is really, every time there's a shock, you're going to be hurt instead of benefiting from the volatility, uncertainty of the market. Okay. Thank you.
There you have it, guys. Mr. Mark Jason Mariposa, the VP and Head for Macroeconomics of CTS Global. Thank you, Jason, for spending your afternoon with us. We learned a lot from you today. My notes are full, and I will be definitely watching this webinar again later in the evening. Thank you also to our participants for sending in your questions. That was a very engaging discussion. As much as we want to answer all of them, we're very limited by the time we have. Please know that we are always delighted to have these interactions with you, and we will continue to have Q&A segments in the webinars to follow. Okay, so again, a big thanks to Mr. Mark Jason Mariposa. Let's give him a virtual round of applause.
Okay, thank you guys. Thank you guys.
Thank you, pare.
Next time ulit.
Okay, next time, ha?
Okay, have a happy weekend.
You too, you too. Thank you everyone for spending your Friday afternoon with us. And please, on May 9, go out there and vote wisely. Again, this has been your host. I'm John Garcia. I'll see you again next time. Happy weekend.